And my guests are with me right here in the studio. Of course, one physically here, and I will start by introducing her, Ifeoluwa Adegoke, who is a financial planner and a certified financial literacy instructor. Welcome to the program.
Thank you so much for having me.
You're welcome. Joshua Chibueze is the co-founder and chief marketing officer at Piggy Tech Global Limited. That should be the owner of Piggyvest, isn't it? Hello, Joshua.
Hi. Good morning.
Good
Thank you for
morning.
having me.
How are you doing?
Very well.
Okay, I think I should start with Joshua. Since you guys are into savings in the country, we just ended we just ended 2023. Speak to me about the savings culture of Nigerians. What would you say about the trend? Has it improved? Okay, is Joshua still there? Okay, I see that the network has frozen. Okay, Ifeoluwa, let me come to you with the same question. What do you think about the savings culture of Nigerians? Has it improved?
Funnily, I was going to cite some of because the platform that Joshua owns and is a part of, they did a savings report recently, and they released some great insights into the savings culture of Nigerians. And it is clear that the savings culture is still strong. People are still saving. At least over 80% of people cite that they are still able to save. But we see that is now how long they are able to hold on to that savings that differ. Because emergencies pop up, things that they cannot handle with their primary source of income, pops up, and they have to immediately consume that saving. And it's like a cycle that keeps repeating itself.
Okay. Joshua is back. Hello, Joshua. I hope you can hear me now.
And I don't know if you can hear me. Can you?
Yes, I can hear you. Yes, I asked earlier, speak to me about the culture of savings in Nigeria. What was it like in 2023, especially as 2023 was a transition year and a lot of people were really sitting on the fence to see who would have won the presidential election, and that may have, impacted their behavior, money behavior. So speak to me about the savings behavior for 2023.
So I think it was very interesting to watch because we looked at the data. So in 2023, we released a savings report. I think it's the first of its kind, and we asked some of our users, how they're able to save, invest, how they earn an income, how they spend money. And we realized that because we surveyed about 10,000 people from our pool of users, and about 64% of them save a portion of their income every month. That was very interesting to see. I don't think this was the case. I would
Sorry,
say
Joshua, I didn't get you. How many percent of their income did they save?
64% of our users save a portion of
Okay,
their
okay,
income
okay,
monthly.
okay, okay,
A
okay.
portion of income
Did
monthly.
you get an
Um,
exact percentage of what portion of their income they are saving? Because I'll come to that later. Did they tell you an exact
well,
percentage of their income they saved?
no, we didn't really get exact, but I'll say holistically, 2023 was our best year. PiggyVest is known for savings and investments, right? And in 2023, we paid out over, I'll say almost 600 billion back to our users, which was very, very incredible coming from the previous year where we paid out about 400 billion. So I'd say it's generally improving. What's happening right now is young people have realized that in Nigeria, you actually must save. There's certain responsibilities like rent that you cannot afford to not save towards, right? So many things that you cannot actually pay in installments, you have to pay upfront. So because we don't have a credit culture, it has not become apparent for people to actually save. And like I said, I was going to say, if you look back 7, 8 years ago, this wasn't the case. Young people didn't have any culture of saving. But today we have so many fintech apps, so many banking apps that now have, very specific savings options that allow, people to whether they want to save, whether they want to invest. I was watching the show now. You were talking about the government bond that just came out, and people could invest as low as 5,000 naira. These are things that are now possible. I think then before you could actually invest or save, you're looking at having at least 100K or a million. You know, you'd only have option to do treasury bills, leave your funds for 3 months. But today, you know, with features on the platform like PiggyVest, you could safe lock or lock your funds for at least 10 days. You know, very, there are more flexible options that allow people, you know, to save within their means. You don't need to wait till you have millions of naira to start to save. You can now do it small, and that's some of the innovation that we're bringing to the table. So people can afford to save daily, weekly, or monthly without having to wait till they have millions of naira. So I'll say the savings culture has generally improved. People now understand that, you know, they need to earn more income because the country, the economic situation of the country is not, you know, palatable to a lot of people. Inflation is going up.
Yeah.
So the only way you can, you know, adjust and, you know, and survive is by earning a lot more income. So a lot of people are going to acquire more skills, just do more things to be able to generate more income so that they can
Okay.
actually afford to even survive. Yeah.
Okay, Joshua, let me stick with you again before I come to Ifeoluwa. You mentioned, of course, in your report, you've seen over 60% of savers for 2023. What category of people? Because I'm, you know, tempted to ask this, that are you
Yeah.
seeing an advent of younger people saving money? Talking about the age group now, perhaps from
Yeah.
18 or 21 to a certain group, because we still have the non-financially included people that don't know how to save on technology-backed apps. There's
Mm.
apps for savings and all of that. So
Mm.
that 60% which you mentioned, young people, how about those that are not banked, those that are not financially included, those that are still using Palasa phone, not this type, and don't even understand the language of technology,
Yes.
you know? So how do we also include those people to save? Because some people, even older people still save, but it may not be on electronic or tech-backed platforms.
So, I mean, at PiggyVest, we're primarily focused on people who have smartphones and can actually afford to save, meaning you earn an income, you have a smartphone, you understand apps, and you can save. I think there's been a lot of, you know, focus on financial inclusion. I think the banks have tackled that enough, but that's not our own focus, right? We are primarily focused on, you know, people between the ages of, I'll say, 18 to 45. But the bulk of our users are within the ages of 25 to 34. That's where the bulk of our users are. These are users that primarily they earn a living, they earn an income every month, or they freelancing or the entrepreneurs, um, and they can actually afford to say they have mobile smartphones. I think the smartphone penetration is increasing year on year.
Yeah.
So we're seeing a lot more there as well. But that's our own focus. We're not really focused on the unbanked or, you know, yeah,
I know. So you are focused on the upwardly mobile people. I know that. So
exactly,
so that's that's
exactly.
that's not your market. But who knows? You know, that's another viable market there. But let me come to Ifeoluwa now, and let me talk about women. Let's bring in the women dimension into it. How do women save? Really, have you seen the culture amongst women saving? Even though that I know that even dating as far back as decades, our mothers and co, they will put their monies here. Anytime you see you, they'll bring it out. They have something to
Absolutely.
give you, or they put their hands here, you
Yeah.
know, and all of that. But have we seen that transition? Now, Joshua, who happens to be the co-founder of one of the savings platforms in the country, are saying that they've seen an advent of young people. What do you also see regarding women?
Yes, I think that is a very fantastic question. And with women, like you said, women have always felt the need to feel security. And financial security is one of the things that is very, very important to women. In my line of work, I have seen a lot more women take their finances seriously, and that starts with saving. Because investment, it comes with risk, but saving itself provides that sense of security, knowing that no matter a bad reach, there's still something at the
I can
back
fall
I
back
can
to.
fall back on. And I would like to mention that there is a significant increase in financial literacy education, especially online. you know, with the growth of technology, you know, people like myself and some other colleagues sharing active nuggets or gospel, preaching it every day, that it is important for you to put something aside to have that saving. And we've seen a lot more women take that seriously. And in fact, in my audience, and I'm sure it's true for a lot of my colleagues, we attract more women because they are the ones that I feel for years back, they've not seen the need, you know, relying on men in probably in a relationship or whatever. But in their own personal life now, we've seen the growth of women taking it more seriously and even building community, bringing their friends along, their sisters, you know, to learn about these things. And yes, I do see an upward trend for women in regards to saving.
For women, younger women, or
Younger,
about middle-aged?
well, for middle-aged women, in my day-to-day interaction with them, they do save. But I feel like they even save more because they've seen life. And of course, they tend to have higher income because they've invested time into their career. So they've seen life, they've experienced what it means to go through these emergencies and not have somebody to call. So I do see that older women save. They have more finances, more inflow to save from. And like I said, experience is part of what informs our attitude towards money. And these women have experienced life in different shoes. So I do believe that more older women take savings more seriously. They don't joke with it.
Do you have an idea of perhaps when you're speaking to both men and women, do you have an idea of how much, what percentage of their income go into savings? I know I'm asking because I do financial literacy videos. In fact, this is also a financial literacy show. This is what I do every weekday, Monday to Friday, talking to people about investment, savings, economy, tying all of that together. Why I'm asking that question is, I know there is the 50-30-20 rule, the budget rule.
Yes.
Why I'm asking that question is, what percentage of income do people save? And I asked Joshua earlier, and he said, of course, they didn't do that, but that they realized that a significant number of people save. So what percentage of people's income do you advise they save?
Well, in terms of advice, you mentioned the recommended structure is 50-30%, which is 50 to your needs, 30 to your wants, 20 to your savings. But I do realize as a financial planner, I interact with people a lot, and part of my work is listening to people's stories. I do realize that a lot of people, they are coming from different points, so there are different phases in their lives. So imagine somebody that is just coming out of debt. Putting 20% might seem like, oh, I'm jumping into the ocean, whereas they need to wet their feet first. So for people, it's quite different. Like personal finance, I like to say personal finance is very personal, right? So we see different entry points. For someone, it might be 10%. For somebody, it might be 20%. But what is advised is at least you're able to do 20% of your income. That is okay for you. And you can do more than that.
If you can do more too.
Absolutely. But 20% is good. But if you're still taking baby steps, maybe you're just getting your finances right, it's okay to start with 10 and just ensure that you're growing and increasing your bandwidth when it comes to saving.
I also think we need to make this as simple and very clear as possible when we're talking about percentages. Let's just put a number to it so that people don't think that we're speaking esoteric. What Ifeoluwa, what we mean is that, for example, if you have an income of 100,000 naira, so if you want to save 10%, that's 10,000. If you want to save 20%, that's 20,000 naira. If you want to save more than that too, it's also left to you. So to just get the mathematics out of the way so that you don't get confused.
Absolutely.
All right, Joshua, can you give me a few tips on how to save money this 2024? Don't talk to me about your Apple. You will pay. but but just give me some, give our viewers really a few tips on how to save money. You know, because a lot of people have been saying that this year, we hope and we pray for good things, but there's so much uncertainty. A lot of people are saying this year, Shege Pro Max, you know, a lot of things happening. How do we navigate the uncertainty? But according to financial planners, you should also save for the rainy day. You know, so what are the tips that you give, like 2, 3, then I'll come back to Ifeoluwa to give us some more too.
Okay, so I like how Ifeoluwa explained the 50-30-20% rule. I think that is the standard that is advisable. But in Nigeria today, a lot of people cannot simply afford to save
Mm.
because they just don't earn enough. So my advice to anyone that is trying to save, to be very honest, would be to try as much as possible and earn more income. The more you earn, the more you are able to actually put aside some money. The more you increase your earning potential, the more you can actually afford to save, right? So aside from the whole standard of 50% for your needs, 30% for your wants, 20% for savings. Yes, you might not be able to do 20%. Yes, you might not be able to do 30 or 10 or whatever it is, but as long as you are increasing your earning potential, you can start, right? And you don't have to start, big. You can always start small, right? So don't think about it as something that is very complex. Um, Rome wasn't built in a day. And saving is a gradual process. Building wealth is a gradual process. But the best investment anyone can do is an investment in themselves. As long as you continue to invest in yourself, it means you can earn more money and then you can save and invest more money. So that's the advice I'll generally give to
Mm.
anyone trying to save and invest.
Okay, Ifeoluwa, would you add to what Joshua had just said? And I want you also to situate it around well, people that have seemingly genuine reasons not to save. Because I've heard people also tell me, Nancy, how do you expect me to save when I'm not even making enough money? My money never take me home. You expect me to save? And I come to them, I'm like, even if it's 100 naira per day, a little drops of water make a mighty ocean.
Absolutely.
So, what other tips do you have, especially even for those saying, I don't get that money. I never chop. I never do all those things, and you expect me to save money.
So I think contributing to what Joshua said, it is true. Like we're coming in from different points, right? And if you're at the phase where you're saying the money is not enough, there's so much you can cut. When we even say, cut expenses, it gets to a point that there is nothing left to cut, right? That you don't have any other choice but to increase your income. However, there is a mindset thing to it. Like you rightly said, even if it is 500 naira per day, once you break that jinx, once you make it part of your lifestyle and habits, when more money comes, it becomes natural for you to just put something aside. So I think mindset also plays a significant role. Don't look down on your widow's mite, right? Just start from where you are. If it is 500 you can do, just keep pushing it aside. You'd be surprised how much that would accumulate to by the time you get to the end of the year. Another tip I would give to people that struggle, because I know a lot of people struggle with consistency and discipline when it comes to saving, is automate. If you have access to platforms, if you have access to technology, you have access to these fintech platforms that are doing wonderfully, most of them have the option for you to automate such that you set a specific amount that you want your savings to go into your savings every month on a particular date. So if you know your salary comes in on 25th of the month, you can set it that on 26th, 10 a.m., remove
So
5,000 naira from my account, and it goes to your savings. So you don't have to think about it, because there will always be temptations and genuine needs that you can divert that money to. So I think that is a tip that anyone listening would definitely find helpful.
Joshua, what do you think would be the impact of inflation on savings? Even though you told me that you saw about 60% of people's savings last year, what do you think that the impact would be, especially as we started a new year, bearing in mind that inflation outlook is still very high? We're operating around 28% now. The December figure will be released in the next few days. What do you think impact of inflation on savings, and how would it even impact
Um,
people like you and platforms such as yours? Yeah.
well, so I think, the idea is people are supposed to save less, right? Because they are putting more money into different things. Also, people are supposed to be looking for more credit options. So I think for platforms like ours, we're going to have to diversify our offerings to kind of like give a holistic financial services experience for our users to say, okay, um, yes, you can save and invest, but if you need to access, loans or whatever it is, credit, you can do it through these other platforms. And that's something we've been doing since the beginning of COVID, right? What COVID taught us is, you know, everything can literally come to a halt completely, right? And we were seeing that we had only access to our savings data, right? We didn't have access to how people were spending. So we started to build out a spending from 2020 so we can actually start to give people credit. So at the end of the day, it's the full chain: savings, investments, payments, and credit, right? So I'll say yes, generally it's expected that people will save less, because, they're having to put more money to more responsibilities, things, the prices of things are going up. They might not be able to afford to save. But I think um, things will get better eventually. But for now, it's to be able to provide options for our users as regards even credit, pretty
Okay,
much.
what do you think will be the impact of government policies on savings? And I'm asking this question, for example, for you guys, you give a savings rate for your customers. And I'm wondering how you bench that savings rate, because even I've said it countless number of times here on the show that I don't know why people still leave their monies in the banks, as it were, in the regular banks where you hardly see any interest accruing on your monies. Perhaps you save to invest, or at least you have some emergency funds and all of that. And why I'm asking that question is, bearing in mind Nigeria's MPR, which is the monetary policy rate, the 18.75% rate it is right now. And if we want to take a look at the savings rate, we should be having about 5.62% from that, which is 30% of the MPR. So I'm wondering how you guys bench your savings account interest rates when the main interest rate in the country is about 5.62%. You know where I'm going to, Joshua. So for people that are using your platform, you are offering an incentive higher than what the regular banks are offering. So what will it be like, especially as we've also been told that this year there would be further tightening, and that means higher interest rates. And when we see higher interest rates, to an extent, there's also higher savings rates. So how will you guys adjust? And how do you come about your savings rates, your interest rates?
Okay. The difference between fintechs and banks is mostly cost. The cost of funds is significantly
Yeah.
lower for we are not spending money on salaries or branches or diesel or a lot of things. So a lot of those funds are plowed back to our users as interest. Now, we've been able to maintain decent rates for the last 3, 4 years. But right now, we understand that the government is borrowing more, which means that as a collective, when we invest in government bonds, treasury bills, and all sorts of things, we're able to get more, which means that we're looking at, increasing the rates slightly a bit, going forward so that we can encourage people to continue to save here in the country. So I think that's pretty much what's going to happen. But for us, the costs are significantly lower. That's why we're able to even afford more than what the banks are offering. It's technology is the difference here.
I like that smart answer. So, but I heard you say you don't pay salaries, really?
We have fewer staff,
Huh? Joshua, you don't pay salaries?
we have about 160 staff, as
Okay,
opposed to banks that have 50K, so
thousands.
we hire very, very slowly. We don't have bulk of staff, that
Okay,
are
so your
paying
operational cost is a bit leaner than the
extremely
banks. Okay,
low, yeah.
okay. Um, do you want to add to what he says? Do you have any other thing to say?
I think Joshua did justice to that. We do expect that, well, for me personally, I've been looking at some of these fintech platforms that we use, that the interest rate should come up, seeing that even the value of Naira has dropped itself. A lot of things are affecting our currency, so people that are using these platforms, they want to see more, at least come closer to inflation rates to know that their purchasing power, their purchasing power is not.
Joshua, are you hearing? Your interest rate should come closer to inflation rate.
But that's what coming.
Okay.
Yeah, Yeah, so that's about it.
Okay. Now, still sticking with you, if are there other smart money tips that our viewers should know about? Because you talked about automated savings. Joshua also talked about the 50-30-20 rule, which is like standard. You can do more. But I also know that there are other smart savings, tips. Are there others that you want to give? And another question is, should we just save for savings sake? Should savings have a goal? Because you shouldn't be saving blindly too. Yeah.
Yeah, absolutely. So I put out something on my page recently about last year that money does not like to be idle. So even if you're putting money aside and it does not have errand or something you've attached to it, you are going to find something to put that money towards, because you will just say, this money is just there, it doesn't have purpose. But that's why it is important that you always attach a goal to your saving. If it is for your emergency, like, it's important that 9 to 5 hours business owners, you should try and build an emergency fund. What we call an emergency fund is a pool of funds that you've put together that can cover at least 6 months of your living expenses. So if you look at your life and it takes you about, say, 80,000 naira as an example to run your day-to-day life in a month, so you multiply that by 6. So you have a goal that I'm building an emergency fund that should anything happen to my primary source of income, should anything happen to my business, or I can't work health-wise, God forbid, I'll have this to fall back on. So by the time you multiply that 80,000 by 6, you know that, okay, what would that figure be?
480, I guess.
Yeah.
480,000.
Yes, you have that pool that just protecting you as a form of security. So always have goals for your savings. An emergency fund is very important.
Should those goals include, for example, rent, buying a car, and all of that? Should they really be, even retirement? Because we don't even talk about retirement enough. We think that we'll all continue to be young.
Yes. So absolutely, rent, things that are personal to you. For me, I call emergency fund is always different when I'm talking about it, and I call goal funds, life goal funds. So you're looking at things you want to achieve this year, for example. Say this year you want to take some certifications. You can create a pool of savings that you're targeting towards the cost of that certification. Things that are important to you and will move you forward in your life. So things like rent, I want to buy my first house, I want to buy my first car, this is the amount I'm putting towards it. So those things are also important. And it is these goals that will keep you motivated. If you are passionate about something, if something is important to you, you would be more motivated to stay consistent even when it's not very convenient. Also, I was reading Josh, their company, I was reading their reports, and in the report they said a lot of young people actually have funds for Japa now, because it's part
Rent,
of
Japa, I think I saw that too.
yeah, it's part of what they are passionate about. So whatever the direction your life is going, you can save towards those major goals. I don't believe that your rent should be an emergency because you had 12 months to plan for it. So for example, you can try and do, okay, my rent is 100,000 as an example, and I'm going to divide that by each month. So if I'm saving 10,000
10K.
or 8K every month towards my rent, I know by December I'll have money to pay my landlord easily without having to stress or call
Or
all
to
my
dodge him.
ancestors about it. So, or dodge him, So those are some of the tips I would like to share on that.
Okay, Joshua, as we're coming to the end of this program, what do you think, how do you think that financial literacy has really played a part in terms of our savings culture, at least perhaps in the last 5 years or so, 5 to 7 years, let me put it that way? And what do you think is the role of financial planners, perhaps asset managers or investment advisors, concerning Nigeria's savings culture? Have you seen a growth?
Yeah, so the thing that has happened in the last 5 to 7 years is that there's been more technology-enabled asset management companies that have come to light. So financial literacy has increased because of all of the education we're investing in. PiggyVest launched in 2016. A lot of people started to understand what savings is, what investments is. We introduced something that allows you invest as low as 5,000 naira. That was something that wasn't, possible before. So a lot of people, the education, we've invested so much in the education of financial literacy that we can confidently say that yes, savings culture and investment culture has improved over the years. And I think we're just getting started. I think technology plays a huge role in democratizing knowledge, as regards financial literacy, and there's really so much more to come. I think we're just scratching.
We're just scratching the surface. I think I also agree with you on that.
Yes.
But it depends on the economy to let the economic environment to be good. So you can imagine if it's better, you can imagine what will happen. If I
Yes.
just a quick one before we go, what do you want to leave with our viewers today? We've just started 2024. All of us are doing financial resolution or resolutions. I want to keep fit. I want to lose weight. I want to have more money. I think these are really the two,
Yes.
Things are revolving around money and health.
Yes.
Yeah, so what's your advice quickly as we have to go?
Number one thing I would say is be honest with yourself. When you're setting your goals, acknowledge where you are, right? Don't look at somebody else's maybe goals or their lifestyle and think that is what is perfect for you. So be honest with yourself. Start from where you are. Dream big, but be honest with yourself. And let your goals be action-based. So you want to live healthier, you want to be healthier this year, you want to save a particular amount, put action to that goal. How would you end up with 1 million naira savings by December 2024 if you've not put it into action? So think about, if I want to save 1 million naira, I have 1 million naira in savings by the end of 2024, how much do I need to save every month? So let your goals be action-based, because when they are action-based, that's when they are actually achievable, or else it's just a dream or a wish in your head.
Okay. Thank you very much for coming.
It's been my pleasure.
Thank you, Joshua, also for the nuggets this morning. It's been nice having you, and let's talk again soon. Let's talk again soon. Perhaps later on in the year, let's see how far we've gone as Nigerians in terms of our savings culture. Thank you very much.
Savings report roundtable. Maybe I'll invite you for it.
Fantastic. I'm available. As the video said, I'm available. I'm not available, but I'm available. Okay. All right. I've been speaking with Joshua Chibueze, who is the co-founder and chief marketing officer at Piggy Tech Global Limited. That's the owners of PiggyVest, and Ifeoluwa Adegoke, a financial planner and certified financial literacy instructor. That's the much we can take. Thank you, guys.